just fully paid off my car loan. One of the most common things that people always tell you is to never buy a brand new car and never take a car loan. And honestly, it's just because people are really afraid of loan. But I'm here to tell you that you really don't have to be if it's in the right situation. Now, you hear this from older generation boomer type people, Dave Ramsey, pay cash for everything. And sure, maybe they'll tell you that a car is a depreciating asset, which true. They'll tell you that interest is just gonna drain your money, also true. And then the biggest thing, that the moment you drive a brand new car off of the lot, it loses so much value. Again, also true. So all that to say, people are saying this from a good place, right? It is generally good advice, but it's not advice that always works in every single situation. And many people do make horrible decisions with these car loans, right? You see those guys on TikTok that are getting like 32% interest loans and making like a $900 per month payment on a car that's 10 years old. And honestly, now that I think about it, I don't know if those videos are real or just rage bait, but they definitely make me mad. But that's exactly my point. It's not the loan itself that's the problem. It's the people that are taking those types of predatory loans out. A regular car loan could be useful in the right situation. So in this video, I want to talk about a couple of different things. Is one, when a car loan actually may make sense. Two, when it can be a really big mistake like those TikTok people. And three, just a simple question, should I be financing my car? If you get on YouTube or listen to Dave Ramsey, the advice is clear. It's always pay cash for your car. Never take financing. And if that means you can't buy that brand new shiny $40,000 car, then don't buy it. And generally, I agree. That is good advice. It's not like a house that's gonna appreciate over time, right? So obviously borrowing money on something that's losing value over time is not necessarily a great idea. Where I disagree with that is that's not always true. It really does depend on how you think about your car. Is your car just a toy or is it a tool? The reason I bring that up, for example, think of a driver that drives Uber Black. They're probably buying a $80,000 Escalade, but that's a tool for them that makes cash flow every single month. And when it's making cash flow every single month, yeah, absolutely get that loan, because if your cash flow from your business is higher than the loan, then one, you can pay that loan off pretty easily. Two, you can also deduct that as an expense towards your business, so then lowering your personal income taxes as well. So in that specific scenario, yeah, could make a lot of sense. But that's honestly just like a tangent, right? That's not even what we're talking about. We're talking about the average regular person. But even for you, it's not the loan itself that's the problem, right? It's lifestyle inflation. It's why are you buying that $40,000 car? Is it because you want to just impress your friends? Probably, that's why I did it. Like I mentioned at the beginning of this video, I just paid off my car in full today after having my car for about a year. Right now, I drive a 2025 Toyota GR86. And we're gonna talk about it a little bit more later, but it's not just a regular GR86. It is a limited edition, one of 860 in the US. And so obviously you can imagine, came with a pretty hefty price tag. It's called the Hakone edition. It comes in this special green color with special stitching inside and got a special badge and everything. And the total price brand new for me was $47,000. And if you want to stick around and get all the details about my specific car, we'll talk about it again at the end of the video, but I bring it up to say, does my loan make sense for me? Absolutely not. I probably should not have bought this brand new car that I just think of as a shiny toy. But I will say that the payment is not ridiculous for me. The total price was $47,000. I traded in my 2019 Honda Accord Sport, which is what I used to drive, had about 100,000 miles on it or so, and they were willing to give me, I think, right around $12,000 for it. On top of that, at the time, I'd gotten my annual bonus, so I put an extra $10,000 down. So when you put those together, basically up front, I paid $22,000. And then the outstanding loan was for about $25,000. Now, then I financed the car, I think over 60 months, and the rate was actually kind of high because the last year or so, just rates in general have been high. So the interest rate that I got on it was 5.99%, which made the monthly payment come out to about $418 per month, which, to be honest with you, isn't that crazy for that expensive of a car. In 2019, I bought that Honda Accord brand new as well with my first job, and my payment on that car was, I think, $330 a month, and the interest rate was really, really low on that car. Comparatively, buying a car that was almost twice as expensive and the payment only went up about $90 or so a month wasn't that crazy to me, especially because I'm making more than double what I was making back then. But the point here is, if your car is just a shiny new toy for you, then yeah, maybe the loan doesn't make sense unless you just have a lot of cash that you want to put down at the beginning, but also take on a loan because you want to preserve your just general cash flow. I put down a $10,000 down payment and it made my payment low. Maybe I could have put $10,000 in the stock market. And if I think that my return on that $10,000 in the stock market could have beat 6% or whatever the interest rate is, then yeah, maybe it's smarter to put that money in the stock market and make more than how much your interest is going to cost. I kind of split the difference and I put a little bit down and took on a little bit of a payment, but that doesn't necessarily mean that the payment itself is a bad thing. If you're gonna be spending $5,000 in a total year on your car, but that means you don't have to put a big chunk down payment down. And so as long as your income can support that payment, it's not always a bad thing, especially when you think about the trade-off of how much you could make with that money when you're using your money to generate more income. But if you think that the interest rate or the car payment is going to cost more than you could make, then pay off the car immediately or buy it wholly in cash. That's the first way that it could work. The second way, actually, we already talked about the Uber situation. If you're buying a car to turn it into a business, again, kind of the same situation as this investment that we're talking about. And then the last reason that it actually could make sense for you is when you just need reliable transportation, but you don't have money like that. Meaning, it's okay for you to not want to drive a beat up 1993 Honda Accord that you buy on the side of the street for $5,000. That's okay. There are other options out there that cost like $10,000 and are going to be more reliable. If that $10,000 car comes with a payment of $200 a month, as long as you have the income, that's okay to get the slightly more reliable car and just have a payment rather than just drop $5K all at once on a piece of crap that's gonna break down all the time. You do, at a certain point, have to think of your car as a tool, and it needs to be reliable. If you buy the $5,000 car and it's breaking down every single day in the middle of the street, that doesn't really make sense for anybody. And similar to the student loan video that we put out a couple weeks ago, buying a car that you can't afford. Sure, when you break it down in payments and it feels like you're only paying $300, $400, $500 a month, maybe it doesn't seem that crazy. But when you add it all up, you're going to be paying way more money over the lifetime of that loan. And eventually it's gonna catch up to you. If you're only making $50,000 a year, then yeah, don't get the car that's costing you $600 a month. It's probably a more expensive car, which probably means your insurance is gonna be higher. Maybe in my case, my car's a sports car. I have to only put 93 octane gas in it, which means gas is more expensive every time I fill it up. Also, it's pretty bad on mileage. So my cost of just operating this vehicle is much more expensive. Again, I did all the analysis and I'm okay because I make enough money to cover all this and it's just something that I wanted to do. But these are things that you should always be considering. The second mistake and how it can quickly turn into a trap is picking too long of a term on the loan. Yes, this is a very similar concept, right? You break it up over more months and that just means that your monthly payment becomes smaller, but it doesn't actually become smaller. It just looks smaller. You're just spreading it out over more time. And actually, because of the way that interest works, you're actually gonna end up paying even more money over the lifetime of that loan. At a certain point, it is very possible that if your car is depreciating and your loan balance is still quite high, you could be underwater on the car, meaning you might owe more on the car than the car is even worth the back of your loan. And the third mistake, the one that I myself am doing right now, is treating your car as a luxury thing that is giving you some sort of status symbol. I know it is nice and you want to do it. I want to do it too, and I did do it, but don't be like me. Don't stretch yourself thin on your salary just because you want a nice car. And I want to defend myself for a second here because I did make a trade-off to get this car. About a year ago when I bought the car, I was actually living in a much more expensive part of the city. I was paying close to $3,000 a month in rent. I made the conscious decision to move further away from the city. I dropped my rent from $3,000 to about $2,200. I was saving about $800 a month, and then I added the new car and the car payment that was $400. So really, net, I'm still saving $400 a month based on where I used to be doing. So that's me defending myself. My monthly cash flow actually went down after buying this car. I know that's probably not the right way to look at it because technically if I didn't buy the car, then I would have been saving $800 a month. Whatever. This is just my way of trying to defend myself, okay? Basically, all I'm trying to say is a car can be a tool or a luxury. It depends on how you want to view it. And all that to say, loans themselves, car loans, student loans, whatever it is, are not always necessarily a bad thing. It depends on your specific situation. So please stop listening to Dave Ramsey every time he tells you to buy a car or buy a house always in cash. Sometimes it doesn't make sense. And sometimes there are real reasons why you should take a loan. When used wisely, that loan can actually be really productive. And of course, like anything else, when used poorly, it could probably cause you a lot of financial distress. You just have to be really intentional about what you're doing and not be emotional. I hope you guys enjoyed this video. As always, I'm your favorite ex-investment banker, Jerome. If you liked it, please smash that like button down below. Subscribe to this new channel. We are posting, and I'll catch you guys next time. Peace.